Mike Webster is our guest on Investing with IBD, sponsored by MarketSmith. Okay, Mike, let's go over, put on your professor hat. We're going to bring up Professor Mike on here.
Well, fair.
And so you've talked about this a bunch on IBD
Yeah.
Live, grading your stocks, right? You have some stocks graded A, other stocks F.
Yeah.
Walk us through your process of how you do this on a conceptual level, I think. Here.
Yeah. So, this came about, maybe over 15 years ago. It's probably like 2003,
Okay.
2004. And I got a call from Bill. And he wasn't a happy camper at the time because I messed up and I sold. We just like what we had right now, the market sold off, and I sold what he felt was like my best stock. And he said, Mike, what's your best stock?
Mhm.
And I'm like, and he's like, I'll give you one hint. It's not what you're up the most on. Click. And that was it. So I'm like, oh no, I don't want this phone call again.
Yeah. Did you ever
So-
figure out what stock he was talking about?
No, because I blew out a bunch of them, so I didn't know. So I'm like, okay, wait, I don't want, Bill is the best ever, right? And I don't want to make him mad, and I want to learn from this. So I'm like, okay, what is my best stock? So I started thinking about it. Well, what? It just seemed logical. At first, I was going to do it on a 1 to 10 scale, and then I, decided, I'm going to rate it with letters.
Mm-hmm.
So the next time we're under, pressure where the market's selling off, I'm going to get rid of my C stock, my B stock, and then try to hold my A stocks because that's what separated Bill from everyone else. He was able to hold a Syntex, an Amgen, Price Company, Pick and Save, list goes on. And along the way, he's trading all these other stocks, but somehow he's just holding this one stock and he's adding to it and adding to it. He would add to stocks a lot more than you would think. He would pyramiding in just a little bit at a time here and there, building his cushion of time as well as price from his cost. But he's a stud. So with that in mind, I wanted to figure out, what is my best stock? So I rate them, and I have it's a very systematic approach, but it is qualitative. So you go through, and your grade for a stock is going to be different than my grade. Probably not. You're not going to give something an F, and I give it an A.
Right.
But what you're looking at are both the fundamentals and the technicals and the sponsorship and the group. So you're looking at the whole picture of it, and where it is in its life cycle. Is this an IPO that just came out of an IPO base, or is this, Coca-Cola that you're trading that's been around for decades and doesn't really have anything new?
Right.
So why don't we start with one stock,
Okay,
and then
so
we'll kind of walk through it.
So let's start off with Shopify.
Okay.
And so I've owned this stock for a while now, and so walk us through this. And so now we're looking on a weekly chart, right?
Yeah, I like to start off on monthlies and weeklies. Let's glance at the monthly first.
Okay.
And when I grade a stock, I start all stocks and I just give them an A. Doesn't matter. If I've got a $2 stock up in front of me, I'm giving it an A, and then I look at the $2 stock, it's immediately an F. I'm not even going to trade it, right?
Right.
So all stocks get an A. Then I'm looking for things that are bad about it to bring it down to an A minus, to a B plus, and so on. And then as I see good things, I raise it up. So, I'm not writing it down, I'm keeping it in my mind. So I'm looking at this monthly, and what I'm looking for is, has this stock been a big leader in the past?
Yes.
Now, it's clear that it has, and has had some really nice moves in it. So it stays a solid A at this point, almost an A plus based off of that characteristic.
Okay.
If this had been in a huge downtrend, right? If we were looking at GE, for example, then that's going to go from an A down to a C or a D right away, just because of its history of being a laggard versus a leader. Now we move over to the weekly. And this is where you do most of your work. And let's not look at the chart first. Let's assume you've done your chart analysis and it's something that you want to grade, because you're not going to grade every stock.
Right.
And I start over in the left side of the chart and look at the fundamentals, and I just go straight down to make sure I don't miss anything. So in the left corner, we have the earnings, the annual earnings. What do you think about those?
They've been consistently growing, right? Went from 15 cents, negative 12 cents in 2016, 15, 38 cents, 46 cents, 23 cents, not the greatest estimate right there. And then it jumped to 79 cents. So
Yeah.
I think
So-
it's pretty solid.
It's got a defect, right? The defect was the fact that it's 46 cents, and if those estimates are right, going down to 23, which is a 50% down.
Yeah.
So now I'm going, okay, that's a pretty major defect if that number is correct.
Okay.
I'm making it from an A all the way down to a B. I skip through A minus and B plus. Then I kind of round back up after I look at the earnings block, and with that section, it's key. Bill would always look at it having at least 3 years in a row where the earnings are increasing. So like you said, minus 12, 15, 38, 46. So you have more than enough there.
Yep.
Then you go and you look at the ratings. So its EPS rating is a 35. Well, that's because it doesn't have the growth rate
Right.
because it's coming from negative to positive. So if you understand how the rating is calculated, you would give it a pass there. But
Because you've already deducted it because of the annual. Right?
yeah,
So-
well, the estimates aren't in the rating,
Oh, got it,
but
got it.
just knowing that it's coming from negative to positive,
Okay.
and that's what's throwing, that's what's throwing it off. I would imagine I have to look into it some more. So I'm going to give it a pass there. The group relative strength is solid in the 90s, so that it's staying an A. The SMR is a C, so that's a bit of an issue, right? So, and the accumulation distribution in C minus is okay. So I'm just going through each one of these things, and in my head, I'm adjusting. And at this point, forget that it's Shopify, and I love the story and all that stuff. Based off these raw numbers, it's going down to a B minus at this point. It has no earnings growth rate or stability.
ROE, the return on equity is only at 2%. That's
Yeah.
not bad.
So we're in the C category here. That's what a C looks like. So you have to be fair with these things because the story is a big deal, concept is a big deal, but you're being, honest with yourself. And I don't spend a lot of time looking at most of the other stuff. The top 5 stocks in the group, that's key. That's a way to find other good names. So I would look at each one of those. The one thing in there that I do look at is the up-down volume. 1.6 is huge. Okay, Bill would look at anything under a 0.8 as being very bad.
Okay.
Anything at 1 and higher is good. 1.6 is massive.
That's
So
60% more up volume than down volume.
yeah, over the last 50 days.
Right.
Right. So that, that makes it from maybe it was at a C minus, now it's at a C or a C plus. It is a big, big important number. Then we go down further and then we look in the quarterly block. And so let's look at the earnings first. Wow. These are some big numbers in here, 300%, we've got a negative, a plus 600, a plus 81. So that C plus is going down to a B minus or a B because quarterly earnings are a big deal.
Yeah, for sure.
Right? Now we skip over to the sales. That's what this story is about.
Very consistent.
It's a sales. Any of the software plays,
Yeah.
it's all about the sales.
Well, what's nice about this is they actually do have earnings as opposed to a lot of the other cloud stocks.
Yeah.
They don't have the earnings yet, but they're very consistent on the sales.
Yeah. And so they're a special breed, and this is a window of time where we're looking at revenues. Now, the market might go back to the way it used to be and just focus on the earnings. So this here, they're being so high and so steady, this brings it up to an A minus.
Wow.
Do you see how we went around? Because if that was a plus 8 on the sales and a plus 2, this would be a D, and I would move on.
Okay.
But
Interesting.
this you can have things that check the box, but when something really surpasses it, and these are big numbers, big company. So we're at a B plus A minus.
Okay.
Now we go over to the chart, and we would analyze this in detail. Let's see. So it's a later stage base according to Pattern Rec, but really, if you look at that base that it formed in
2018.
2018.
Early 19.
There's really a pattern in there where it undercut. There was a little cup with handle that broke out, failed, or almost broke out, failed, and undercut. So that reset, that's really a stage 1 there. Now we're coming out of a stage 2.
Yep.
We had that big move up. Now it's this first pullback to the 10-week line. So it looks normal.
It's acting well.
Right?
Yeah.
Let's look at the daily. So we're at a B plus 8 minus. And, that reaction on the earnings, that was a huge move up.
Right.
But the fact that it closed at the lower half, not the lower half, really at the bottom of the bar, that's a bit concerning. Then it was going sideways, acting normally. I was looking to, to try to buy it, if it went over that little bit of resistance, but the market brought it down.
Right.
So the context of you always want to pay attention to what the market is doing to the stock. So with that in mind, that was so strong, I'd put this at a B plus, looking to buy it off of the bounce off the 50-day.
Okay. So that's the final grade for Shopify.
B plus, A minus.
Okay.
What would you give it?
No, I think that's fair. I mean, this is one of my top stocks, and so this is one of the ones that I'm still holding, and yeah, so I have it at really at the top of the list. But I'm also it's behaving really well, and also that story is so big too,
which is a big part of it that we didn't go into,
exactly.
And it's. If you didn't know the story, you read some IBD articles on it, you go to the company's website. We didn't have time to do it here, but you also look at sponsorship. All these things are going to move that letter grade around.